to another Monday TA live session here with Black Box Digital Asset Management. We have a very exciting week coming up. FOMC and CPI print tomorrow should be pretty interesting, to say the least. We I guess as indicated in the title, I do not expect low volatility this week by any means. I'll get into exactly what I'm looking for a little bit later in the show, but yeah, definitely expecting some movement, definitely expecting some VIX movement, and we'll get into that in a little bit, but I'm gonna go ahead and start here on as we always do, the monthly total charts. We'll start with total 1 here. Looking not great, if I'm being honest. You know, we're seeing money flow come down. We're seeing stock and RSI come down. You know, this kind of looked like it wanted to peak and turn, but now, you know, I'm looking at this kind of I believe it's convex VWAP wanting to turn back down. So I am expecting this momentum wave here to do something like this. Maybe we get that, something like that. So yeah, not the most bullish chart, and I know it is the monthly, so it's not the biggest deal in the world right now, right? Like, this isn't going to play out tomorrow, but you know, we'll wait and see. I mean, this doesn't necessarily point to a bottom being in. Like, you know, back here in 2018, we just had one little wave down here. We got the green dot, we got the hidden bullish divergence, and we blasted off. This one right here after COVID crash, we didn't even get that wave down. So, you know, if this were to be more bullish, I would look for this to really, like, you know, had come straight up through here and not done this little curve deal right there. But, you know, as I said, it should take a while to play out anyways. Looking at the weekly doesn't look terrible, honestly. If we really take a look at market cipher B here, I mean, yeah, it's kind of curling over, but it doesn't look terrible, honestly. The money flow is still coming out though, so that's not a great sign. You know, I wouldn't look to accumulate in a big way until we really start to see this thing turning back up. But in general, right, you know, probably some decent value at these levels across most assets. I do still, you know, expect altcoins to bleed. We'll kind of look at some of those total charts here, right? Like, this is excluding Bitcoin. So obviously, like we talked about last week, ETH has been holding up the market. You know, we got that equal low here versus that lower low here, lower low here. We got that equal low. We're still seeing that kind of convex VWAP money flow still coming out. Yeah, kind of the same deal here. This is really the alt ticker, right? Is the monthly total 3. Still seeing the same thing. Not a whole lot of data on that. We'll look at the weekly. We should get some more. Yeah. So, yeah, that VWAP really did reject that zero line. It's coming back down. Money flow is coming down. We got the red dot. I would expect another wave probably down to that, on market cipher, that minus 71 area. So what would that look like on here? Probably it's definitely gonna put in a lower low, right? Like, that's what I expect, is a lower low, and then we'll have that kind of 3-wave divergence right there on market cipher. That's where I'd look to accumulate in a big way some of these altcoins. You know, because if we just look at, like, you know, to the 2019 high, right? I mean, altcoins have got 68% to go, right? Whereas ETH and Bitcoin, we'll measure these real quick. 53 and 70. Wow. So ETH obviously has been holding this one up, and obviously has a lot farther to fall. Let's just go look at ETH real quick, actually, now that we're talking about it. We'll throw on our macro range. Obviously, we're still sitting right at that 0.25, acting as resistance, like we talked about. Just getting wicks above it, no closes though. If we look at our local range, which, yeah, we mapped out this range high, this range low. We're kind of sitting in between that 0.25 of the macro and 0.25 of the micro range. You know, some closes above here, I'd look to target that 1450, that 0.5 up there. You know, if we continue to get rejected here, I would look first for that 1166 and then that 1068 and then lower. Just from a range perspective. Yeah, I did have some of these boxes drawn out. Let me extend this real quick. There we go. Yeah, so this lined up with the range, that 0.25 of the range, and a VPVR volume profile. So it has been acting as resistance. Again, if we start like, you know, getting up here and closing up here, I would look for that, you know, I would look for that basically. And then from there, I would probably, just in this environment, look for that short position, probably like something like that. Obviously, that's a pretty wide stop, so you know, that's a 6, close to 7R trade right there. So that's not a bad look, but I just put it above that candle close. But something like that if we do get up there. Again, this is kind of the place you don't really want to trade. We're not really in a defined range per se, right? Like we're not near any support. We are near resistance, so that is one thing, but it's kind of a no trade zone for me. Yeah, also the fib, you know, a lot of resistance between that 1280 and 1315 area. Let me see what these are. Yeah, these equal highs, so let me get rid of that. Yeah, so we're kind of in this range from these equal highs back here and up here. We're kind of just chopping here. Whichever way we break, I'd look to, you know, continue that move. So if you were looking for the long, right, like if we did break the, where is it, the box. Yeah, this one. If we did get up here above these equal highs, I'd look for 1340, 1370, and then eventually that 1450 area. Those could be some take profits. But I guess going back to, I guess we'll go to Bitcoin real quick, and then we'll talk FOMC. So let's go look at like the weekly. Actually, let's just start macro. Let's start on the monthly. Monthly non-log. You know, clearly this has been a year. Cash is king, right? Cash is king. Not really worth buying these dips. Like if we take off the Heikens, like, you know, yeah, we had that, but like overall, not a year you want to be 100% allocated to crypto for sure. Kind of looks like this back here. So, right, we are still holding the range high back here. Very important level, obviously. We took that from this high back here. We're getting a pretty, you know, pretty non-informational candle right here. Dojis can be looked at as trend reversals, or just chop, basically. Like we had a big doji up here. This, I wouldn't really even call this a doji, honestly, because we didn't really get those big wicks. I mean, it's just this tiny little candle. So we'll go a little bit lower time frame and see what we can get out of this. But obviously on the lower time frame, we're looking at a loss of the level and a retest. So, you know, obviously the end of the month of December is very important to see whether we, you know, this is just a back test and then a continuation lower down to like that 13.8 level. Or if we can get back above, reclaim, and get back up into that range, like anywhere in here, right, is where I would look to possibly put on a short unless we can really reclaim and rip. But, you know, obviously if we see like this and then we just start chopping, that's probably where I'd look to get short and then trade it back down to these lows eventually. But, you know, we wouldn't really be able to get too overly bullish until we saw brick back test up in here, and then we saw that, right? Like there's where you might want to get long. Obviously that's the conservative approach, and you would have missed out on, you know, that move. But if we do reclaim this, I mean, all of this liquidity up here is in the cards for sure. So yeah, that's my thoughts on Bitcoin in the shorter term. I mean, this is just terrible, right? Like we've been in this range since November, right? For the last 2 weeks, we've basically done nothing. So, you know, we'll see what happens. People are probably calling this a bull flag. I don't know if I would say that yet. We're just really consolidating under resistance. So, you know, I mean, if we do start to substantially lose this, you might not be able to get in unless you want to be a breakout trader. You know, but if we do start to lose and then back test, and then, you know, that's where you get short. And if you get up here and bounce like that, that's where you get long. So on the daily, we do have a red dot. We do have money flow coming up. It is kind of starting to roll. VWAP's coming down. Momentum looks like it wants to come down. No bearish divergence as of yet. If we go down into the even lower time frames, look at the 6 hour, our little boxes we've drawn. Yeah, so obviously we've got some stop loss liquidity up here in this imbalance. I'll just draw a new fixed volume range. Let's just draw it like this. Boom. Yeah, so we've got that value area high right above us. If we can get back up in there, I expect us to go take these stops up at 17.6. Everybody's talking about that 17.6 level. Definitely an interesting area. I would look to get short anywhere up here, honestly. This is kind of a no trade zone for me again. 6 hour looks decent. We got that little wave, that kind of trigger wave right there. The green dot. Money flow is kind of flat. Looks like it wants to come up though. Let's just check the 4 hour real quick. Money flow looks not great on the 4 hour. The momentum, you know, RSIs, VWAP all look good, but money flow is kind of flat, which you don't love to see. Kind of makes sense that it's flat, being, you know, us being in this range, but yeah. So those are kind of my ideas for Bitcoin. Honestly, I've not been paying as much attention to Bitcoin over the last couple weeks, just since it's been, you know, chopping sideways. I'm sure a lot of people have been chopped up in this range, getting long and short, and trying to trade this with very low volatility. I'm sure people have gotten wrecked trying to do that. So, you know, I have not been a part of trading this range at all. But I will look for positions both higher and lower. So, but what I really wanted to talk about today was the S&P. And obviously we are getting some movement, getting a little on-stream action today. S&P is ripping. You know, obviously it's closed, right? So it closed at 39.90. We got a pretty decent move. Let's look at the daily candle. Yeah, we got a pretty solid daily candle on it. What do we get? About 1.5%. Not bad. So I'm gonna pull out some patterns I've drawn here. My light went off. There we go. We've got this rising wedge, right? And typically a bearish pattern, a break of it usually targets the low. So that would be that, you know, low of the entire downtrend at like 34.90-ish. It's looking like it wants to retest and possibly get back inside. So if we kind of line that up with our normie downtrend line that anybody could trade, right? If you had just shorted this line, you'd be up pretty decently right now. Totally dependent on CPI and what Jerome Powell says on Wednesday, but looking for at least a test of this 40-50 area, based on this candle and based on some of the things I've seen and watched and read about, CPI expectations. We are expecting a 7.3. That's consensus. I've seen a lot of people throwing out numbers like 6.9 and 7. Obviously, if we get a 6 handle on it, I would definitely expect a higher high than 4,100. I'd probably expect closer to 4,150, maybe even 4,200. And that would be an area I would look to allocate to longer dated short positions in the form of put options, most likely. But that's just me personally. So yeah, we've got a bearish pattern on top of inside of a bearish pattern, right? We've got, if we look at like the VIX, the VIX gapped up pretty solid today. The VIX gapped up like, 1.5% or 2%. No, it gapped up more than that actually, didn't it? Yeah, 6% today. Depending on what Powell says, right, if we do get that kind of face ripper rally, I would expect a kind of a double bottom, like maybe something like this on the VIX, maybe get bullish divergence and then go. Maybe something like that, right? And then that bullish divergence, that's where you get short, ride the VIX up. Something like that. Doesn't have to play out that way, but in general, we have exited the short range, right? Like if you're not already short, I would wait for this to come back in this range, definitely. And yeah, obviously we've talked about all this before, but we don't see macro bottoms until the VIX hits 46. Up here in this range should represent much lower on the S&P. So if this thing does keep going, that should imply the S&P falling a lot more. I am a little bit cautious, obviously, as we should have a lot of volatility this week. We should get a whipsaw tomorrow, probably on FOMC. And it's totally, in my head, it's totally dependent on Powell, right? Like, unless it's like a 6 handle or an 8 handle, anything that's like 40 basis points up or down, it really is dependent on what Powell says on Wednesday. So just be on the lookout for that. I've got these boxes drawn. They are based on, all of them are based on volume profiles and macro ranges. So obviously, right, like if we look in the lower time frames, we were rejecting this area quite frequently the last few days. Couldn't really get above it. Obviously today we blasted above it. Yeah, so anything between 4,200, I wouldn't say 40.20. I would wait, honestly, on a short, but anything from like 40.40 up to 4,200, I would look to fade probably. Like I do expect us, if we get a low CPI print and a dovish Fed, that we do get a higher high. It'll be interesting, right? Like if we do come in at consensus tomorrow, to see whether or not Powell is overly dovish or hawkish. I expect him to, let people know that we are still going to be higher for longer, and I'm not sure if the market's going to hear that the way that it's intended, because it clearly didn't 2 weeks ago when he was saying that in his little emergency presser where he just, which was this candle right here actually, where he just pumped the market. So yeah, it's all going to be dependent on what he says and how the market interprets it, but I would look to fade anything up here, in my personal opinion. Maybe like what would I look for? I mean, maybe closer to this box, because like if we hide this one, yeah, maybe somewhere closer to that, like 4150 to 4200 area is a better better area to look to enter short if you do get a low CPI print and dovish Fed. That's what I'd look like. As in terms of a higher high, that's where I'd look. In terms of a lower high, in terms of a lower high, anywhere between 40.30 to like, let's see, let's get down to the nitty gritty, the 1 hour. Yeah, anywhere from 40.30 to like 40.50, somewhere in there. I would look for that lower high. If we don't get that and we do have a low CPI print, I would look higher. But yeah, based on today, I don't think we're gonna sweep the lows until at least tomorrow or Wednesday, if we do have a bad print or if we do have a hawkish Fed. But yeah, that's enough on the S&P. That's a good amount. So some more macro indicators I look at. Obviously, we've talked about this before, but the spread between the 10 and 2-year yields. You know, we throw on our fun arrows, right? When this normalizes, this goes down, steepens, down. We're looking for this to steepen and for this to come down, right? Nothing too crazy. The S&P is in green. The spread is the candles. Also looked at the 3-month, the 10-year minus the 3-month, which has been a better indicator of growth peaking rather than the 2-year, 10-year is kind of just a broad range that says a recession is coming. This actually has a 100% hit rate on recessions and growth peak. So again, same kind of story, right? Like steepening curve. You know, you could say steepening curve and we got the COVID crash. That wasn't really, you know, that was a black swan, but steepening curve, down, you know, every time in history we've seen that happen. So if you are bullish, then you are expecting this time to be different, which, like I've said before, are famous last words. Sorry about that. This is net liquidity. So basically, this is the ticker, right? I'm not going to read the whole thing out, but it's the Fed's balance sheet minus reverse repo, overnight purchases, minus capital and liabilities from the Fed's balance sheet, I believe. So this is a kind of a good indicator to watch. This is overlaid with the S&P, obviously. This correlation has been insanely tight for the last year. Drop, consolidate, pump, kind of consolidate. We got the pump. So this is one that I'll definitely be watching because we are in a QT, quantitative tightening cycle. But obviously, as you can see, they're not always tightening, right? They're not always rolling treasuries off their balance sheet. They're not always sucking liquidity out of the system, right? We are in a downtrend, right? So that's their overall policy, and they are sticking to that. But there are times where this thing will spike, and you will get S&P upward movement. So right now it's at 6 trillion. You know, obviously they started at 7, so they've taken taken $1 trillion out of it already. But if you are bearish, you want to see this thing bleed. If you're bullish, you want to see this thing tick up. So it's definitely one to watch for confluence, right? Like if we see some divergence starting to happen, you know, like if we see net liquidity start ticking up while the S&P rolls down, so kind of grinds to the downside, that's a move I'd like to fade. And if you see this thing start, you know, bleeding while the S&P kind of grinds up, also a move I'd fade. So yeah, not a perfect trading mechanism, but definitely one you can use for confluence, along with these other macro indicators. This is HYG, which is high yielding corporate bonds divided by TLT, which is the 20-year treasury bond ETF. So essentially what you'll see if you go back and look is a divergence start to happen where capital will start to move into TLT and HYG will sell off before before a VIX spike and a significant risk off event in the equity markets. So this is obviously HYG over TLT. So if you're bearish, you want to see this thing drop. If you're bullish, you want to see this correlation continue to tighten. Or for HYG to go up and TLT to bleed. AKA, risk on is people going into those HYG bonds, and risk off is them, fleeing to TLT basically. This is kind of that risk off signal that we've been seeing the last month. Is basically investors going to TLT for that kind of safe haven asset versus HYG. We are seeing it tick up again, so we are kind of getting a risk on. I wouldn't say a risk on signal, but we're seeing a lessening of the severity of the risk off signal. I'll say that. We're not seeing a super clear confluence. If you see this thing just start to tank, right, that's not good. That is not good for, oh my God, what is this? How do I get rid of this? People are in the chat. Get rid of that. Okay. Sorry, we had some bots in the chat. So I mean, like I said, if you're bullish, you want to see this come up. Bearish, come down. All right, pretty straightforward. Again, that corresponds with a VIX spike, which we are seeing. If I do this and I add, if I do this, right? We saw the VIX start to spike as the divergence picked up. Now we are seeing it kind of stall out, so I would expect that VIX to kind of double bottom and then head up, or at least come test that like 20 area again. Again, in confluence with net liquidity and a positive CPI print and a dovish Fed. So expecting the week, honestly, to be kind of bullish, which is something I'll look to fade, but I wouldn't be overly allocated short right now. There's a George Soros clip, and he was talking about the 2008 financial crisis, and he was saying that he was right on the direction. He was correct. He kind of predicted that it was coming, but he kind of got chopped up because of the bear market rallies, right? And we've obviously seen some pretty aggressive bear market rallies. Like these are not small bear market rallies by any means. So basically his point was, we've got 16%. Let me just do this actually. This will be easier. This one we had 12%. We had 17, and we had 17. So basically his point was to size down and be more nimble, right? I'm sure they were just overly sized short and not very liquid or nimble in their short, and kind of got chopped up or maybe forced out of a position. So his point was, when you are right about a trend but you still get chopped up, right, there's nothing worse. So that would be my recommendation, right? Size down, be nimble. Don't go into some binary event like Fed this week and CPI this week and be max long or max short, right? Either way, you don't want to be too overly allocated in one direction for a binary event. It's going to resolve one direction or the other. But my lights went off again. As it relates to crypto, right? I mean, just apply everything I said to the S&P about crypto, basically, right? Like, if CPI comes in low, aka like a 6 handle or a 7.0, and Powell's dovish, expect that 4,200, 4,150. If that's not the case and he's hawkish and he says, rate hikes aren't working the way we wanted them to, we're going to have to keep going, higher for longer, blah, blah, blah. Expect this to be a lower high, right? Expect this to be this or this or this, right? Expect that to be that. And then we get this. And it's kind of too perfect, right? Like it's kind of too perfect, I would expect a deviation just because it's too easy on retail traders, and that just can't, the market makers can't live with just handing retail traders a win, which after such a clearly defined downtrend, this would be, right? They wouldn't just let everybody get short right here and then just win. So I expect either a higher high or a chop for like a month and then down, or actually probably just those two options. I don't really expect this thing to just nuke unless Powell is super hawkish and we do get a bad CPI print. But yeah, I mean, we'll just have to see. And then I'll do a couple alts real quick just to get them done. We'll do Link real quick. Still in the range, right? I mean, this is just so boring. Let's take it from here. Yeah, still in the range. Now that we've kind of lost that point of control, I would look for that 610 to get taken. Obviously, all this is dependent on CPI, right? Eventually, expecting lower lows, expecting lower than 5.3, eventually. Matic, same deal, has been stronger as of late, but let's just pull this actually just for fun. Yeah, so if we lose that 0.8 again, we can obviously first target that liquidity at 0.69, but then I'm looking for 0.6 and then 0.38 for sure. Obviously, all these things could rip if we get a good CPI, so keep that in mind. I wouldn't pre-position, especially with alts, into CPI. Same thing with Uni. Lower lows expected. Same thing with Atom. Cosmos, definitely one I'm looking to accumulate lower for the next bull run for sure. But I think we're going to be able to accumulate in the $4 to $5 range, right? Somewhere in this area. We barely tested that. I would expect these to get taken back here at 4.3. But yeah, guys, I mean, we got a big week ahead. We'll keep you guys updated. We might have to do an emergency stream on Wednesday or something when Powell starts talking, and do a little Fed live stream. That might be a good time. But those are my general thoughts. And yeah, we'll see what happens. I mean, overall, I think we've got lower to go. Does that mean they can't mess around and send it higher and chop it around in the meantime? No, it doesn't. So we'll see what we get, and we'll update you guys when the time is right, obviously. And yeah, just be careful, size down, everything I was saying basically, because it can get choppy, and we never know what's going to come out of Powell's mouth, like that speech a couple weeks ago, right? So we'll just have to see, but we'll be here waiting and watching, and looking to looking to make money off it somehow. But obviously, we're being responsible, and we urge all of our followers and our friends and family to be responsible as well. So keep that in mind, and I will see you guys in the next one.